It was another excellent day in the stock market with the S&P 500 up over 1.2%. And it was a pretty nice broad-based rally once again. Really the only laggard from a sector perspective was energy, as we did see a lot of those once hot commodity plays starting to cool off once there's been some rumors that perhaps peacetime talks between Russia and Ukraine are becoming a little bit more fruitful. Whether that happens or not remains to be seen, but what we do know is that the markets are on much more stable ground today than where they were at just 1 month ago, and so that has helped our bullish postures across the board. I wanted to show you in particular one major tech stock that is on one of its biggest winning streaks of all time. Then we'll get into our trade application example where I wanted to focus on a telecom giant that seems to be breaking out to the upside, or at least bouncing up and off of its rising 30-day moving average for a bullish swing trade. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's March 29th, 2022. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into our description area. Make sure you're signed up for our email distribution list. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ. We really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into tonight's trade activity, and let's get started here with our heat map as we usually do. And as you can see, another sea of green here today. Like to see this type of behavior. We have seen it quite often in the last couple of weeks. So for the most part, our major tech players were all in the green here. As you can see, they kind of post those major tech and tech-oriented companies off on the left-hand side here, with Microsoft, Apple, Nvidia, Visa, MasterCard, Google, Facebook, Disney, Netflix, all doing pretty well here today. On the right-hand side, where we've got some of our smaller sectors, it was a little bit more hit and miss. This was not one of those 90% up days or anything along those lines, but there were some areas that did have some very robust outperformance where it was consistent across the board. In particular, I would point out real estate. We don't talk a whole lot about real estate during these presentations, but that was one of the more noteworthy bullish areas of the market here today. You can kind of see where I'm circling my mouse right there. It says real estate. And we've got all these boxes here behind us, and they're all green. This to the left is energy. So as I mentioned before, Chevron, Exxon, Conoco suffering to a degree today with commodity plays under pressure, but real estate was back in play to the upside. The other area that caught my eye in terms of its consistency to the upside was consumer discretionary. That's kind of your block up here in the upper right-hand corner. And again, same thing, you don't hardly see any red squares up there at all. Amazon and Tesla and Home Depot and Starbucks and McDonald's and Nike all doing quite well here today. So those were some of the more consistent players. In terms of some of the less consistent or inconsistent areas, you could probably throw financials into that category, where you had Bank of America and Wells Fargo closing lower today, but you had JP Morgan and Citigroup closing a bit higher. You also had a little bit of hit and miss activity there out of the healthcare and out of the industrials areas. So it seemed like tech, it seemed like real estate, it seemed like consumer discretionary, very strongly bullish here today. And really from a consistently negative perspective, we didn't have a major sector that stood out, but if there was a loser today, it was probably energy as a result of the market's willingness to look past the once hot commodity trade. Let's go ahead and now take a look at our other main part of the platform. I always like to pull up this chart here whenever we have at least a 1% move in the market. We've had a lot of those lately, fortunately to the good side. As you can see, the S&P 500 was up 1.23% here today. And this green line right here will show you how much the stock went up and whether it would be considered an above average type of a day or not. This blue horizontal line represents the 1% price move. the orange horizontal line would be a 2% price move. So when the green bar goes up and over the blue bar, like we see right here today, that means that was yet another 1% plus type of a day. And we were talking about that a week or two ago as well, where we had quite a few of those green bars stretching to the sky. And that's obviously a big bullish feature there. And even if you were just to look at the S&P 500's trade activity here, it's been one directional to the upside, and that's a nice healthy change of pace. We were really getting beat to a pulp here for a while, it felt like, for a couple of months to start the year. So it's nice to see it on the flip side now, where there was once consistent selling, now we've got consistent buying. And as you can see, the S&P 500 breached a pretty important level here today, as it was able to clear over the resistance area from both February 2nd and also February 9th. There was a little bit of a double top right around that area. And with today's robust move to the upside, we've now cleared through those areas. That's a bullish feature there as well. So we're basically trading at our highest closing price since this candle back here on January 14th. Not too shabby for a market that was struggling not too long ago. We're not all that far away from an all-time high yet again. Remember, the S&P 500 hit its all-time high here on January 4th. The NASDAQ Composite was back in November, so it's got a little bit more work to do. But the S&P 500, theoretically, if things keep up at this pace, I mean, who knows? Maybe by the end of April, we'll be talking about new highs again. Of course, after that, the old saw goes that you sell in May and go away. So I'm sure there'll be plenty of people chirping about selling at that point as well. But April is usually a pretty strong month for the stock market at large. So if those seasonality trends hold this year, then perhaps that's a little bit of wind in our sails there to a degree as well. Also wanted to point out that the VIX is below 20. Some of you saw me tweeting about that yesterday, where I said, and just like that, volatility has left the building. Remember, it wasn't too long ago we were talking about how remarkable it was that the VIX stayed above 30 for so many days in a row, and how that was fairly rare. Here we are just 2 or 3 weeks later, and now we're talking about a VIX that was consistently above 30, falling all the way below 20. And so now we're kind of back in those lower echelons of volatility. And of course, those of you that sold puts, like we did very often in these market outlook videos when I've done my presentations, we should feel the benefit in two different ways there. When you're selling puts on high quality stocks, when the market looks like this up here, you're getting two benefits. First benefit you're getting is you're getting to sell a lower strike than you would have been able to otherwise, or you would have been able to receive juicier premiums, I should say, or you could have really done both depending upon your circumstances there. So when the market does turn around, it moves away from wherever your sold price was on your put, and the volatility component kind of compresses. So you sell something with high volatility, and eventually that volatility gets squished away. Some of you may keep your sold put trades into expiration, in which case you don't even have to buy them back at all. But if you do choose to buy them back and lock in, let's say, a 95% of your profit potential, then that volatility compression that we've just experienced from 30 down to 20 is a big time assist there, as we are in the NCAA Final Four mode here. Very much looking forward to the Blue Bloods here coming up this weekend. So good luck to your teams with Duke and North Carolina and Kansas and Villanova. Should be one for the ages there. But yes, it is volatility that can assist your sold put trades if volatility goes lower after you sell your puts, as we did so often here in the last couple of months. Also wanted to show you here Apple. So I kind of hinted at that previously, but Apple is on quite the run here. Take a look at this. We have 11 days in a row that Apple has closed higher. Remember, you could really just count these green bars here if you wanted to. Otherwise, you can take a look at those kind of black outlined candles up above. Either approach would be fine, but they'll both get you to the same number. This is the 11th day in a row that Apple has closed higher, and that is an extremely rare feat. I would imagine you'd have to go back many years since that sort of thing has happened. Of course, Apple is a phenomenal company, one of the greatest business stories known to man, but even it has a down day every so often, and so this has been quite the consistent move higher for Apple. And you'll notice we are not that far away from an all-time high in Apple, which was hit on January 4th as well. And remember, when you are the largest market cap company in the United States, for all intents and purposes, you are the most influential member of the S&P 500. So when I mentioned before that the S&P 500 could theoretically get to an all-time high within the next month, it's to a large degree because of Apple and Apple's consistency to the upside, and they may be able to hit their all-time high within a couple of days, let alone within the next month. Under the right set of circumstances, Apple could literally be hitting all-time highs by the end of this week. So it has been remarkable to watch the consistency. They haven't necessarily been splashy, massive outperformance numbers, skyrocketing prices, that sort of thing. But there have been a number of at least 1% and 2% moves. As you can see with these green bars here, a number of them did touch this orange line here along the way, telling us that they were at least 2% moves there for Apple as well. So wanted to point that out because it was so rare and we don't see that type of consistent behavior all that often. Let's go ahead and now take a look here at our normal foregrid. And so let's take a look at the various major U.S. equity indices here, starting with the S&P 500 in the upper left. Notice that we continue to have a strongly bullish posture, and of course that is the case with all four of our charts, so that way I don't have to repeat myself all the time. We'll just get it out of the way and say all of them are strongly bullish at this moment in time according to the market forecast technical indicator. And remember, unless you hear David or I say otherwise, what we're referencing there when we say something like the posture is X, Y, or Z, is we are referring to the intermediate posture. So that's the green line on the market forecast technical indicator down below. And you'll notice that all of our lines, I take that back. I almost misspoke. Technically, the Dow Jones Industrial Average isn't quite in the upper reversal zone, but the other three all have their green lines above 80 at this moment, what we refer to as the upper reversal zone. Dow Jones is very close to it. It's at 76, so it could theoretically get there as soon as tomorrow if it's another up day for the market. So it's strongly bullish postures across the board because remember, even if the green line isn't in the upper reversal zone, as long as it's between 50 and 80 and rising like it is here for the Dow Jones, we consider that to be strongly bullish. So for those of you that are newer to the video, that is the differentiator between the light green color on the background and the dark green color. The dark green is strongly bullish, so it's maybe a little bit more confirmed that the bulls are in control, as opposed to the light green color, which we would refer to as weakly bullish when that occurs, and that's a little bit more dicey, I guess you could say, where the confirmation isn't necessarily there. It's a start, but you don't want to necessarily bet the house because that can be a whipsaw type of experience more often than not as well. So for example, on that point, down below here on the NASDAQ composite, you'll notice on this 3-month chart in the lower left here, notice how many times we had this light green color that shaded the background. Several times in the last 3 months. None of them led to an actual trend reversal up until what we are dealing with at this moment in time. Right here on this candle on March 21st, we went from a weakly bullish posture to a strongly bullish posture. And so now you could say this is more substantial. The bulls have a little bit more pull in this particular market, whereas it fizzled quite quickly in these other attempts previous to that when the posture just simply got to weakly bullish. So that's the good news. We are in strongly bullish postures across the board. You'll also notice that all of our moving averages have green tips right now. All right, we talked about that last week as well, but for those of you that might have missed it, what that represents is price is above a rising moving average. So when I was with you on Thursday last, there were a couple of these that still had yellow moving averages. So just one example here, the Dow Jones, when I was with you on Thursday, did have a strongly bullish intermediate posture, but its moving average color was yellow at that time because price was above the falling moving average. But you'll notice now, with another couple of days of upside action, all of these 30-day moving averages have now reversed higher, and prices across the board are above those rising moving averages. And that's bullish behavior. Doesn't necessarily guarantee that we're going to go on this major multi-year run or anything along those lines, but it does say something that it was not saying earlier in this 3-month period. Previously, whenever we'd get above the moving averages, like we did back here on the Dow, like we did back here on the Russell, we almost did on the S&P 500 right there. But the point is, notice how none of the moving average colors were green during those times. So again, it wasn't highly confirmed that the bulls really wanted to take over. Now that we've got that combination of a strongly bullish intermediate posture combined with a moving average bending higher with price above it, it's giving us the sense that the bulls are much more substantial this time around, and that's a positive sign there. The S&P 500 was up 1.23% today. The Dow Jones was our laggard here today. It was only up 0.97%. The NASDAQ Composite had a very nice 1.84% increase. And then the Russell 2000 was our star today. It was up 2.65%. In fact, it was up so much, you can see this nice little red dot that's showing up above the candle from today's price activity. And what that signifies is it matches up with this little red dot down below here as well on the indicator. That happens when you've got the green, the red, and the blue lines in the upper reversal zone on the same day. Now, we refer to that as an overbought cluster signal, but keep in mind what I'm sure David has mentioned to you along the way. When these overbought cluster signals occur early in the trend reversal, it can actually be perceived as a bullish thing. It's basically saying that that energy that was once spent up on the bearish side of the equation has now fully catapulted itself to the other side of the equation very quickly. And it doesn't mean that it's going to continually go higher every single day, but what it's kind of trying to tell you is that this is now an uptrending security. It doesn't really look like it with the, if you're just eyeballing the chart, but what that green line down below is trying to tell you is that from this indicator's perspective, this is now a strongly bullish candidate here. And usually when you get those dots showing up early in that move, it's not necessarily a detractor to the move like it can be when it's later in the move, right? If we had already been in an upward trend for 6 months and then you get this overbought cluster signal, then we have more worries about that situation. But when it happens early in the trend reversal like we're witnessing right now, it doesn't have to be the end of the move, so to speak, like you might be assuming at first blush. So anyway, kind of interesting to see that show up here all of a sudden, and you notice that the S&P 500 had that show up actually here on Friday as well, and you'll notice that the S&P 500 has gone up 2 days in a row since getting that little red dot. So it doesn't, it doesn't mean that the S&P or that the Russell 2000 has to stall out here either. Who knows? Maybe it goes up another couple days. But that was quite the move on the Russell 2000. This thing was going a little bit sideways here for the last week or so. Remember what I've been saying is that the Russell 2000 had been our leader. Now, we have seemed to have been surpassed in this most recent move. So notice that the S&P 500 now has its intermediate line at 89, whereas the Russell 2000 is only at 87. Remember, that was not the case previous to that. In the last, let's call it 3-4 weeks, it was the Russell 2000 that went down the least amount. They were the ones that got above their moving average the fastest, but the problem is they didn't add to their strength after getting above the moving average. Once they got above it, they just went sideways, right? You see this for like 7 days in a row. It was pretty sideways activity there on the Russell 2000. Whereas the S&P 500, it had a little bit of a delayed response getting above the moving average, but once it did it, it didn't go sideways like the Russell 2000. It just kept on going higher. Again, thank you to Apple for that. And so it does kind of seem like there's been a little bit of a switch here recently where the large caps have taken a bit of a lead over the small caps, but maybe today kind of balances things out once again with the Russell 2000 being our leader on a one-day basis here. Let's also take a look here at our 3 green arrows chart. This will be chart 4D for those of you that are premium members of Market Scholars and following along at home. And you'll notice here that we do have 3 green arrows across the board on all 4 of these charts. On this chart 4D, if the background color is green like it is, that means we've got 3 green arrows. What that is referencing is just 3 different technical indicators that are lining up bullishly at the same time. We're using the 30-day moving average as one technical indicator. We're using the MACD histogram as another technical indicator to measure kind of momentum. And then we're using the stochastic as our third technical indicator, which kind of gives you a sense as to whether prices are closing near the highs of their recent trading ranges or not. And so from all 3 of those perspectives, we do have bullish activity across all 4 of these charts. So I would say that's a positive sign there as well. Chalk one up for the bulls. If we take a look now at our longer term chart, let's take a look at our 1040 crossover method chart. This is chart 4C for those of you following along at home. Be aware that we do have some negative crossovers that we're still working through. Some of you might refer to those as death crosses. Sounds quite ominous, but there is some good news on that front. And that good news is the Dow Jones, after being in kind of a death cross environment here the last 2 or 3 weeks, with this week's move so far, and let's remind ourselves, it's only Tuesday, so there's still 3 more days that get added to this eventually. So the picture can change by the end of the week, so you want to double check that on Friday for sure. But as of this moment in time, if the stock market closes here or higher on Friday, then the Dow Jones will be back to a golden cross. You can see that green background color kind of sneaking in off to the right-hand side there. So that's the positive news. The S&P 500, interestingly enough, still stayed that golden cross territory this entire move. So it was the only one of the 4 that did not have that pink background color. Notice down below, NASDAQ Composite, Russell 2000 still sitting in that pink background color. And as I mentioned before, Dow Jones just emerging out of that as of this moment in time. So we still have death crosses here on the Russell 2000 and the NASDAQ Composite, but there is a chance that the S&P 500 could get through this move without breaching those 2 lines. Now keep in mind, some of you might be using daily candles when you're looking at death crosses versus golden crosses, and so for you, you might be looking at 50-day moving averages versus 200-day moving averages, but what we use here in this particular instance is weekly candles instead of daily candles. So 10-week versus 40-week is what we're looking at here in this case, and they're exponential moving averages, so they give you a little bit more weight to the more recent time period as opposed to further back. But obviously, if there's 5 trading days in a 10-week period, that equates to a 50-day moving average. And same thing, if you take 5 times a 40-week period, that would be 200. So depending upon what you're looking at, there is some room for some sensitivity in those particular moving averages. But the way that we kind of look at it here is that the S&P 500 is the only one that was able to keep its 10-week moving average above its 40-week moving average, just barely. You can see down below here on this PPO underneath the chart that if it were to cross that kind of orange dotted line that you see down there, that's when there would be a cross in the moving averages themselves up above, and it basically came right down to that orange line and then bounced back higher again. So it was just by the closest of margins that this thing retained its golden cross that we continue to have to this moment, and it's looking like there's a chance that with the bullish price activity in the last 3 weeks, we might just be bailed out here if the bulls are able to maintain that strength. Let's go ahead and pop on over here to the internet. I always like to get a chance to say thank you to those of you who help support these market outlook videos. Remember, they take up quite a bit of time, usually at least 3 hours all in with everything that we have to do that's associated with them. So we do them hopefully to get some education out there, spread the word about our business, but they are completely free of charge and we don't make any money off of them. So if you want to help support our efforts in doing these videos for you as often as possible, we simply ask that you click like for us there on Twitter. Last time you guys got way up and over 100 for me, so I really appreciate that, which is why we're doing our full-length video here, including our trade application example tonight. You guys have certainly earned your keep from that regard. So thank you to all of you, including Prickly Trader and Eugene and Fred and Lucius and Doug and Dennis and Big Jock and Common Sense Investing, Boy and Girl Dad, Business Famous. Thank you, Business Famous. He's got a pretty good Twitter feed, by the way, for those of you looking for some humor and some memes. We've got Carlos and Jayesh and the Tesla bot. How about that? And Freed and Paul and Sarah and Ashwani and Mark and Tom and Ed. Too many names to go through, but I do see you guys coming through, and I really do appreciate that. So keep up the great work on your end. That goes a long way with both David and I. So thank you so much for helping support these videos. Also, let's take a look at our sector selector. Remember, I tend to put these together on Friday nights, and so you'll notice the dates up above each of those columns representing the Friday dates, and in this case, energy was able to maintain its #1 position when I put this together last Friday. And as I was telling my class here yesterday morning, obviously if we go one more week, you can see what that means for energy, because the way this works is a rolling 13-week graphic, basically 3 months worth of information here. And you'll lop off this one from December 31st on the next graphic view, and that'll mean the first one we'll see next week is 1-7, and that will be the brown energy circle up there at the top. And as long as they retain the #1 place, they will have a clean sweep, and that is pretty rare. You see that occasionally when one sector really starts firing all cylinders, but what made it so interesting this time around was that for a while, energy was the only game in town. None of the other sectors were performing well at all, and energy was kind of all by itself at the top. That doesn't really describe where we're at now. We have seen a number of sectors starting to stabilize and get a little bit more bullish here recently, so that's the good news. But yes, if we get one more week up there at the top as of this Friday, which I guess is April Fool's Day, right? Maybe we'll all be fools because we'll be paying up for our gasoline in our vehicles as energy stocks are roaring higher here in the last 3 months. And you will see that materials makes its way up to #2, which is its highest placement in the last 3 months. As I was kind of explaining to my class on Monday morning, this graphic or the logo that I've designed up above here will kind of show you some icons in them, and they do serve a purpose. This is kind of your economic and sector cycle that you might learn about in the textbooks. And of course, when you're trading, it never really comes out perfectly like in the textbooks, but nonetheless can provide a good example and a reminder that when oil, which is this barrel that you see that I'm circling right here, and then materials, which is this pick and this shovel for kind of the mining companies and all that, that would be your materials. When those two are up at the top, as they are at this moment in time, it does sometimes portend bad things for the economy in the future. And the basic reason behind that is when energy and materials companies are doing well, it's usually because commodities prices are high. That's when their profit potential is the biggest. But the problem is when all of these other sectors need to buy commodities as input costs in order to convert those raw commodities into consumer goods and then sell them at their own profits, the impact of that high inflation up front kind of deteriorates their profit potential. So, if you're, I don't know, like Kellogg's or General Mills, and you need to buy a bunch of wheat to convert into cereal to then sell at the grocery store, if wheat prices have gone up tremendously, but you can't pass off those higher prices to the consumer in the end, then your own margin gets squished. And so that can happen across the board with a number of these sectors. So is this the canary in the coal mine? Not necessarily. Similarly, we'd probably have to see this be persistently strong for a long period of time with both energy and materials up there, but it is something to at least think about in the back of your mind as we move forward here into the summer of 2022. You'll notice that on the bottom, we continue to have communication services, information technology, and discretionary for the fourth straight week. They are the bottom three in the exact same places. All right, let's get back on over here to the charts. Also a reminder that I taught my dividend growth investing class earlier today, where we concentrated on the utilities sector. So if you're interested in what utility we purchased for that class and you're a premium member, that recording is now posted. David taught his directional option strategies class, and then I'll be back in action tomorrow morning with my factor-based swing trading class. I'll look forward to seeing many of you there as well. All right, let's do some 12 grid analysis now, and we're going to take a look here at chart 5A. So this will be our asset class 12 grid, and a reminder that the background colors on these 12 grids will be either green or pink, and that will be determined by whether the securities in question have either bullish or bearish intermediate postures according to the market forecast technical indicator. And so as you're taking a look here, you'll notice that there's a pretty healthy mix between green and pink. And remember, that's usually the case on this first set of 12 grids because this is supposed to be a diversified group of different asset classes. It's a little bit different than if you're looking at all stocks or all bonds or all commodities or something. This first 12 grid has a mix of all of that. So naturally, there's going to be some stuff that's in favor, some stuff that's out of favor. So let's kind of review things here, starting with the bottom rung, as we more oftentimes have here recently, as they have been some of the drivers of the overall market. And we did have a give back in interest rates here today. Might not be considered all that dramatic in the grand scheme of things because, as you can see, TNX continues to be in a very robust uptrend. In fact, today's pullback, which you can see that candle was pretty aggressive, right? It's just that it's so far above the moving average, you don't really want to make too much of it. But if you were just to kind of zero in on the size of the candle here today, that was a pretty big down move right there. You know, it's just a little overheated moving into that move. So we kind of have to keep that perspective about us there as well. Despite that move lower in interest rates here today, we do continue to have a strongly bullish posture on the 10-year U.S. Treasury yield. Remember, on the Thinkorswim platform, you move that decimal point over to the left once in order to read that out. So it is a 2.4% 10-year Treasury yield at this moment in time. Of course, a little bit lower than where it was trading a couple of trading sessions ago, but this is still close to multi-year highs even after today's slight pullback. Remember, the opposite tends to be true as well. When Treasury yields go down, Treasury prices go up. And you can see up here with TLT, it was up 0.76% today. So that's not a perfect corollary there because long-term U.S. Treasuries do contain, you know, your 10 years, your 20 years, your 30-year bonds, whereas this is purely focused on the 10-year interest rate down below. But usually you will kind of see that inverse relationship regardless, and that was the case here today as long-term U.S. Treasuries were up. However, there's still a lot of work to do, right? It's kind of the exact opposite conversation that I just mentioned a moment ago with yields. They have a little bit to give back before you'd ever consider saying that yields are no longer in an uptrend. Same thing goes for TLT, but in this case, we would say it's got to go up a lot more before you would say it's no longer in a downtrend. So a little bit of a counter trend move that we saw here today in each of the cases, but it did not actually change the intermediate posture. We remained strongly bearish on TLT, strongly bullish on TNX. Commodities had an interesting day. Oil actually ended up bouncing up and off of its rising moving average pretty nicely after gapping down lower in the day. Earlier this morning, a number of those oil companies were really struggling. A lot of them did still close lower, like I showed you earlier on the heat map, but they paired their losses pretty nicely because oil itself was able to kind of stabilize. And after gapping lower to start the day, we actually rallied into positive territory by the end of the day. So that was a good, healthy response to it meeting up with its upward trending 30-day moving average. As you can see, it still didn't change the posture. It remains weakly bearish, but I think this is a good start. And so if oil can continue to move higher in coming days, then I think there's a pretty decent chance that that background color will switch to green. Right now, that's just speculation, of course. Gold's a little bit of a different story. a couple of days ago when I was last with you on Thursday, I was actually looking at this with quite an optimistic eye because it looked like it was bouncing up and off of the moving average. And wouldn't you know, here, Friday and then Monday were give back days there on gold. And gold, similar to oil, also gapped lower today and also rallied throughout the rest of the day to positive territory. So just barely in the case of gold, but it did close barely in the green today after gapping pretty tremendously lower. So that's, I guess, a good sign there for those of you that want to be bullish on those particular commodities. The bad news is in the case of gold compared to oil, you will see here that we remain strongly bearish with our posture. That dark pink background color tells us that, as opposed to the light pink over here. You'll also notice that price is still below its 30-day moving average here on gold, whereas again with oil, you're still above the rising moving average. So of the two, it does appear that oil is maybe a little bit more robust in this environment. They both have done, of course, tremendously well in the last several weeks and months to start 2022, at least compared to typical stocks. But, you know, at some point, those trends very well might end as well. A lot of people figure it might be, you know, the Ukraine-Russia type of situation that would cause a directional change there in commodities. If all of a sudden peacetime were to emerge and there wasn't so much pressure on the commodities that typically would have come from the wheat fields of Ukraine or the oil fields of Russia, then that might be a little bit of a sigh of relief from the overall marketplace. And so keep your eye on that situation. Obviously, that's hard to game, but it is at least useful if you want to kind of know what kind of hand you've been dealt. If you're dealing with commodities right now, one of your risks is that there is peacetime over there, and of course the world wants that, but you as a commodities trader may have a slight disadvantage in that conversation. Over here on the left-hand side, the U.S. dollar was down a bit today. It was down 0.6%, but you can see it remains above its rising 30-day moving average and continues to have that strongly bullish posture. Some of you saw me tweeting about Bitcoin here recently. There was a really nice breakout yesterday on Bitcoin. It stayed up here at around $47,000 or $48,000 here today, but you'll notice yesterday was the big day for Bitcoin. You broke out above that prior resistance area. I think I had highlighted that for you guys in the video last week. I said be on the lookout for that potential breakout on Bitcoin. And I didn't know for sure that it was going to happen. I could just see that it was going to make an attempt, right, as you started to see it rising above its moving average there. We now know that it did break out. This candle here a couple of days ago or yesterday afternoon, whenever it was able to get up and over those prior resistance areas from mid-February and also beginning of March there. So that's a more positive sign there for Bitcoin. And you can see that not only does it have a strongly bullish posture, but it also has that green moving average, prices above a rising moving average once again. And so you can see that we're close to 3-month highs on Bitcoin here all of the sudden. So it's participating as a risk asset alongside the rip-roaring tech stocks and everything else that was doing well here today. You'll notice that up above, when we're looking at our foreign stocks, EFA had a very nice day. It was up 2.22%. We had foreign stocks from the emerging perspective up pretty nicely as well, up 1.7%. One of the things I mentioned to you guys last week in regards to the difference between the two was EEM was not yet above the moving average, whereas EFA was. So from that perspective, it seemed like EFA was kind of our leader of those two at the moment. It continues to be the case, as again, they outperform them on a standalone basis here today. But I would be remiss if I didn't point out in this case that EEM is now above its moving average. So that's a positive sign. Doesn't mean that, you know, it's going to all of a sudden start outperforming EFA, but it does tell you that the bulls are more serious at this moment than you might have anticipated them becoming, because they could have easily sold this off at this falling 30-day moving average. Instead, they took the opportunity to bounce this above it. So now the key will be, how long can you hold above it, right? EFA has done a good job for about a week and a half staying above its moving average. So you got to give them credit there. Can EEM do the same thing? Remember, that's EEM is where Russia is housed and it's where China is housed, a couple of hot button areas around the world when it comes to how we think about them from an investment perspective. Also notice that preferred stocks had a nice day. We don't talk all that much about them, but you will notice that PFF was up over 1% today. Not only that, but you get the feeling looking at this chart that there is a reversal pattern that's trying to shape up here. It might not be a perfect inverted head and shoulders pattern, but that's kind of what it gives you the impression of right there. And so not only do you now have a strongly bullish intermediate posture, but you also have price above a rising 30-day moving average for the first time since going back here to January 13th. So pretty impressive move there with preferred stocks today as well. Let's take a look now at our Sector 12 grid. That's chart 5C for those of you following along at home. And here, once again, we've got a clean sweep. That's not entirely surprising because remember when I was with you on Thursday, that was already the case. And so it continues to be the case naturally when we've had nothing but upside price activity since that time. So we have had a continuation move here more than anything else. So now all of these not only have strongly bullish intermediate postures, but notice that there's now only one chart left on the board that doesn't have a green moving average tip as well, and that happens to be financials right up there near the top. As you can see, the financials, or XLF in this case, has a yellow moving average, so price is above a falling moving average. But all the rest of these now have green tips. That includes staples down below, which was not the case last week. And that also includes real estate, which was kind of off and on depending upon the day last week from that regard. Now, I'd mentioned earlier that I was really impressed with the consistency of the move within real estate today, and you can kind of see what I'm referring to here now. These candles almost seem to be building on top of each other with XLRE up nearly 3% today. It was our strongest sector. Look at the size of that candle right there, bigger than the size of the previous days, which was bigger than the size of the previous days before that, which was bigger than the size before that. So you don't see that type of behavior all that often. Usually it's the opposite. You start your move with a really outsized candle and then they progressively get smaller. This one, it almost gives you the impression that the momentum is building up, like a boiling pot of water or something like that, and all of a sudden it's just going to burst higher. And so it's going to be interesting to see what ends up happening with real estate. But today was a fantastic day for real estate. Not only was it robust price moves there, but as I mentioned before, basically every real estate stock in the S&P 500 was up here today. Now, in terms of who our laggards were today, that was energy. It was the only sector that actually finished lower today. It wasn't by much. It was only by 0.26%. And again, I need to stress it was a lot worse earlier in the day. I think XLE was down like 2% earlier in the day. So they nearly got back to break even by the time it was all said and done. As you can see, they've got a little bit of a long lower shadow there, and we closed near the highs of the candle, despite that candle still being outlined in red. We closed near the highs of most of these other charts candles as well, but of course we closed with positive gains in their cases. Again, the exception to that, I would say, is financials. Seems to be a little slippage there in financials. In fact, I was pretty close to doing a short sale on Wells Fargo as my trade application example tonight, but I opted to go a slightly different direction in the end. But that's one that maybe you guys can look at as kind of a backup example if you're looking for short selling ideas. Some of those banks seem to be kind of stalling out a little bit at these levels, but you'll notice that XLF did not close near the highs of its session. It did still close higher by 0.23%, but it actually closed in the lower half of its daily range here today. It's a little bit bizarre behavior when you look at most of these other charts closed near their highs. Healthcare was kind of in the middle of its range, so it was somewhat closer to financials there, but pretty much all the rest of these did close near or at their highs of the day, which again is a very good bullish sign for the health of the overall markets. So let's go ahead and get into our trade application example now. And so I'll show you what I ended up doing instead of the Wells Fargo short sale. Decided that I would take my cues from the market and their bullish posture and do something bullish. And in this case, I happened to spot the chart of T-Mobile, of course, one of the three largest telecom companies here in the United States, alongside AT&T and alongside Verizon. And you can see here that T-Mobile has had quite the nice back-to-back days here. Yesterday was a robust day where we kind of had our close above the high of the low day. Sometimes you'll hear us refer to that as a hold pattern, right there at that support level of the moving average itself. And then today was a follow-through of that hold pattern, and it was bouncing up and towards this high that it had set here maybe about 2 or 3 weeks ago. So that is maybe one of the downsides of this. Some of you may prefer to wait until the actual breakout takes place. There is no guarantee, of course, that will happen, but that's one of those things that you'll have to decide for yourself. This one's kind of a tricky one because, yes, it's bouncing, but you're also close to a breakout. So it's kind of one of those blended breakout bounce types of trades. But again, with the setup here that I had in mind, you'll notice that we do have this blue line on the market forecast giving us a permission, so to speak, to take this bullish swing trade with it rising. Not only that, but the green line, the intermediate line, also has a bullish posture there. And when we're looking at this particular chart 3A here, we also like to see the situation where the stock in question is outperforming the S&P 500, which is that dotted line down below. So all in all, this one has held up pretty darn well compared to most other communication stocks here in the last few months. So I figured let's go ahead and do a bullish swing trade on it and see how that goes. We put our stop loss below the candle here from a couple of days ago, and with our 1-for-1 reward risk relationship, we would be targeting this area up here at around 133 or thereabouts. So a simple stock trade for us here tonight. Hopefully you got some value out of the presentation, and hopefully your accounts are holding in there a little bit better than they may have been, let's say, a month ago, and perhaps some of the spirits are a little higher here all of a sudden after the bulls have kind of reemerged themselves as we're kind of heading towards the summer once again. So anyway, thanks for checking out the video here tonight. If you did get value out of the video and you want to continue seeing the videos put out as often as possible, we do ask one simple thing out of you. Just click like for us there on Twitter. That goes a long ways there for us, and we really do appreciate those of you that help support us in that endeavor. So I hope to see many of you premium members tomorrow morning in my factor-based swing trading class. For the rest of you, I'll look forward to seeing you on YouTube at some point down the road. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.